Good morning and happy new year from the law offices of Brent Williams-Ruth. I am Brent Williams-Ruth. And today I am coming to you with a statement from the Department of Revenue that relates to the new estate tax filing obligations for surviving spouses. After I read the statement, I'll then break it down into plain language because sometimes government speak isn't necessarily clear to everybody. So, effective on January 1, 2025, it says that a married or registered domestic partnership couple, spouses, where one spouse passes on or after January 1st, 2025, may be able to exclude their qualifying personal residence from determining if they need to file an estate tax return. A decedent's gross estate includes one half of all community assets plus all separately owned assets. When spouses have a qualifying personal residence included in the gross estate, the decedent's estate can exclude their portion of the personal residence when determining if the decedent's estate is required to file a return. If the decedent's gross estate value is below the filing threshold, currently at $2,193,000, then no return is required to be filed with Washington State. The exemption is only used for determining if a return needs to be filed. For a decedent's gross estate without a qualifying personal residence that meets the $2,193,000 filing threshold, a return will need to be filed. When a return is required to be filed, the decedent's share of the personal residence will need to be included in the gross estate. The exemption is only for determining if the return needs to be filed. The residence is not excluded when filing the return. A filing is required anytime the gross estate meets the filing threshold, even if no tax is due. Special elections. For a decedent's estate that wishes or needs to make elections, be sure to file a return even if the gross estate is below the filing threshold. This is true if the estate is making a qualified terminal interest property QTIP election. If the estate wants the QTIP election made, including a zero QTIP, a filing must be made with Washington State. All right. What does that mean? Let me break this down to you. In 2024, let's say that you passed away and you have a house that you owned with your spouse worth $1 million. And you've owned that house together for 50 years, and it is jointly owned, it is community property. Half of that $1 million value belongs in the gross taxable estate of the decedent. Now, in Washington, even if you have no tax due, but the total gross taxable estate exceeded the filing threshold of $2.193 million, you had to file a tax return, and we just had to sit around and wait until we got a letter saying, we've processed your tax return, everything is copacetic, go ahead and close the estate now. Perfect. The reality is that many homes in the Puget Sound region are pushing people into a taxable estate simply because they've owned their home so long and the value of real estate is what it is in Western Washington. So that's where the legislature in their infinite wisdom came up with this new law. So let's say that you and your spouse have a total set of assets worth $4 million. Let's make it $5 million. And that each of it is $2.5 million in total value. And that's because you've worked, you've saved, you have, invested well, you have IRAs, all of the different things. And it equals $2.5 million in total value of the decedent's death. So decedent had $1 million in investments and a house that is worth $2 million, of which, again, you take half of that, $1 million. And then they had just other assets that were in their name, cars, things that make it worth that $2.5 million threshold. In 2024, that executor would have to file an estate tax return, even if there was no tax due. Because it was exceeding 2.193, you had to file a tax return. Now, if that person passes away in 2025, because the house, which was worth $2 million together and $1 million belongs to the decedent, you get to take that $1 million out for the qualifying personal primary residence. So when looking at their assets for determining whether an estate tax filing is due, you only have $1.5 million in assets. Therefore, you get to go through the estate administration process and be done without having to file that estate tax return, where the current backlog is like 28 months of waiting for that to be processed. So good news for people, especially my clients in King County or that have significant land holdings. I have clients in Eastern Washington that have hundreds of acres that they live on, and that is, their property values have gone up. And so again, this is a new thing that will help streamline, because so many people have what we lovingly refer to as the I love you will, where whoever dies first, the surviving spouse, gets to keep it. Now, that special elections comment at the end of the statement, for all of my clients that have the Q-tip elections or people who want to disclaim into a spousal support trust, even if you're below the filing threshold, you still have to file a tax return to get that Q-tip election. So again, this is just to help share some general information. My clients, you can contact me if you have questions. If you are working with a different attorney and you have questions, feel free to reach out to them. This is a step that will help, hopefully, the estate administration process go smoother for a significant number of people who saw a great increase in their home values over the last 10, 15, 20 years. All right. Thanks so much for watching. If you or anyone you know could benefit from talking with my office about estate planning or estate administration needs, feel free to give us a call at 253-285-7751. Thanks so much and have a happy new year.